Okay, I will honor the time that we have with those that have joined us, and we do have a few more that are expected to attend. Welcome. Thank you so much for joining us today. This is our 13th webinar in our Navigating Your Business Through the COVID-19 series. And today's webinar is an overview of the Paycheck Protection Program, or PPP, forgiveness. You know, nationally, over $520 billion in PPP funding loans that has been administered, over the past year, as well as over nearly 300 billion, close to 300 billion has been forgiven. That's significant. So today, this topic is relevant and timely for sure. In North Carolina alone, it's been really busy, very busy time for us with approximately $5 billion, and that's with the B, guys, funding has been awarded, and that's significant volume for our state. So this webinar is being hosted by the SBTDC, Small Business Technology and Development Center, and we are a partner with the SBA, the Small Business Administration. And specifically, as a part of the SBTDC, we have a business recovery and resiliency program. And we have taken on developing webinars that are informational that will help you during these difficult times, make your business better. And so today, our webinar is being offered, of course, across the state. Specifically for business owners who have received SBA funding through PPP loans and seek to receive forgiveness of those loans. We also have business counselors and lenders and affiliates and partners who provide assistance to businesses every day that are here with us. So thank you so much for being here and spending the hour with us. Also, I'd like to welcome you all on behalf of Byron Hicks. Byron is our SBTDC Executive State Director. He was named the State Director of the Small Business and Technology Development Center earlier this year, in fact, in January of 2021. He also serves as the Assistant Vice Chancellor of Business and Technology in the Office of External Affairs at NC State University. He's engaged with many North Carolina partnerships and very instrumental, has been, significant in being involved with so many economic development opportunities and actual programs across the state. So we're very fortunate to have Byron as our executive leader. Okay. So this map that you see really does illustrate our area of coverage. We operate across our state. We have 10 regional centers, and we're hosted on our UNC system campuses with 16 offices within those campuses serving all of the counties across the state, all 100. The SBTDC is the extension. In fact, it's the Business and Technology extension of the University of North Carolina system. And for over 36 years, the SBTDC has been a key resource for business owners. So here's just a tip of the iceberg of what we do. We provide confidential business counseling. We actually develop and execute and deliver educational programs. And we're connected to so many resources that will help make your business better, small and mid-sized businesses better. And as a part of the regional centers, I mentioned earlier, the Business Resiliency Program, we have counselors like myself, we're called BRCs, and we're focused on business counseling during specifically this economic time of COVID and post-COVID. Bob Weston is the state director of the BRCs. You may see his contact information on this slide on the right, along with the website for additional information about the SBTDC. So we hope today, after our webinar, you will connect with one of our business resiliency counselors. I'd like to introduce one of our specialized teams. Our team specifically is focused on PPP forgiveness, and we will guide you through a lot of information today. So hang on and get your pencil and pen or computer ready to be able to take notes through the process. Okay, so we actually decided to form these deep dive teams, and we have them in several areas. In the EIDL, RRF, which is the Restaurant Revitalization Fund, and other areas. And we did that so we could really dive deep into understanding more and to be able to help you in your business. So we basically, for PPP forgiveness, have this small team of just 3 of us as a part of the overall business resiliency program. And our first person to your left is Rob Bauer. He is located in Greenville in the East Carolina area. And Bianca Capo is located in Charlotte, and myself as well, located in Charlotte. So like our other teammates, we have a deep experience in many aspects of business strategy, operational management, leadership development, supply chain, M&A, and so many other key areas of business expertise. But the real plus of it all is that we truly understand entrepreneurship because we've also been small business owners ourselves. So we get it. And today we'll provide the details about PPP forgiveness and answer your questions. I will ask that if you have a question throughout the presentation, please feel free to include that in the Q&A tab. At the end of this webinar, we will take a look at those questions and revisit the questions that we haven't answered and be able to answer and to ask any other additional questions that you may have from there. But also, I want you to know that if you have any question, whether it's about PPP forgiveness, any of the other relief programs that are administered by the SBA, or just quite frankly, you need business counseling and consultation, I will encourage you to reach out to your local BRC counselor in your region. So today's agenda, let's hit the highlights here. We will explore the background. We'll inform you about the current state as things have been changing. And we'll provide details about the overall forgiveness process, including forms and other information that you need to know. It will be a journey, a little journey or walk through the past, the present, up to now, and into the future. As you have questions, again, I'll remind you just to enter them into the Q&A and we'll address them at the end of this session. All right, so how in the world did we get here? You know, it's been a ride. All of us have been through, personally and professionally. So let's just kind of look at this slide, take a top-down view and walk through how we did get here. So just imagine, and this is actually a fact, the PPP's original $349 billion allocation was fully used within the first 2 weeks. That was significant. And so a significant change early on was to expand the covered period. And you'll hear more about that later from Rob. Originally, it was 8 weeks, and then it went to 24 weeks. So what happened here was somewhat of a collision of 2 very well-intentioned programs, the PPP program and the increased unemployment benefits. So many companies, mostly restaurants and retail, found that since they were either slowed down or, quite honestly, worse, many were shut down by government order. And many of their employees were laid off and claimed the newly increased unemployment benefits. The impact was that many companies took out a PPP loan. They had trouble spending all of that money on forgivable payroll within that 8-week period. So the covered period was expanded then to 24 weeks. And the percentage of the loan that borrowers had to spend on payroll was dropped from 75% to 60%. And we'll cover that in more detail as we walk through more of this information. So, you know, as the pandemic dragged on and companies needed more help, The Consolidated Appropriations Act, CAA, passed into law late last year. It allowed companies to take out a second loan. That was the PPP2 to cover additional costs. And one of the more recent changes under ARPA, which is called the American Rescue Plan Act, was that changes that allowed many of the owners of small companies to get a loan based on the 2019 revenues versus their net income. That was significant. So as you can see, a lot happened. There's a lot on this slide. There's a lot in between these, segments of change and impact that occurred. I think the biggest takeaway here is that the PPP program has changed many times, and there's a likelihood that the program could change again, and during this forgiveness phase. So we highly suggest that you stay close to your lender, that you stay close to your SBTDC counselor, and you want to make certain, because they do have this information, you want to make certain you stay close to the counselor, because they will have the latest, and they will partner with you in order to get you over the finish line. All right, so the numbers. Then this may be a little difficult to see, but I'll give you the highlights. Just to put it into context, here's some key statistics. Nationally, it was close to 11 million loans. 11 million loans, not dollars. The number of loans that were made over by 5,500 lenders for a total amount of $780 billion. I mean, what a nighttime story to tell your kids, right? This was significant. This works out to an average of about $72,000 per business. But in reality, 85% of those loans were less than $50,000. And the average was propped up just by a relatively low number of multi-million-dollar loans. So while there's, of course, debate about this in general, you'd have to say that the program has helped to target the market of small businesses. And you can also see that the typical lender made around 2,000 loans, okay? The bigger players, the bigger banks and lenders made significantly more. Just as a reference point, B of A, as an example, made over 150,000 loans, and PNC over 40,000. So you can imagine that they've got a lot of volume, and that's a key point that we'll talk about a little bit later. In North Carolina alone, we saw over 114,000 loans being made with an average loan amount of 48,000. The key takeaway is that with this kind of volume that the banks are processing right now, you need to make certain that your PPP forgiveness application is as easy as possible for the bank to say yes. And our goal is to help you get over that finish line and to give you some tips on how to do just that. So with that, my teammate, Bianca Capo, if you will, please walk us through what may be forgiven.
Absolutely. Thank you, Elisa. So the $1 million question, what can be forgiven? On the non-payroll expense side, you see here the major expenses. The payroll expenses should account for 60% of the loan. Some of the expenses you can see here: wages, salary, paid sick leave, retirement plan, healthcare plans, self-employed owner compensation replacement plans. And the key here is that there has to be a minimum of 60% of the loan. On the non-payroll side, this should be a maximum of 40%. And here you can see mortgage interest, business rent, leases, utility costs, supplier costs, PPE expenses, business continuity software. And so property damage, even changes that you had to make or repair because of social unrest during the summer of 2020. Consider this, that you can include in the application an expense that was incurred before the covered period and it be forgivable. Give you an example: a non-payroll expense, a water bill, an electric bill, cell phone bill, something that was covered in that period, but the bill was or covered before the period and the bill came due. in the covered period. And so you can realistically go back a month, depending on the type of bill, and it'd be covered. Another example of a PPP expense is an example of a drive-through window, for example, that wasn't there before COVID. What did you do with your business or to your business that was necessary for you to get through COVID? That's an example of something that you can include. Next slide. Here, I'll tell you really high level, briefly, the overview of the forgiveness process. First, you can apply for full forgiveness as soon as the money is used or as late as 10 months after the end of the covered period. If you don't apply within that 10 months, you will start making payments on the loan. You can still apply for forgiveness, however, at any time during the term of the loan for the remaining balance. Then you submit, you have a second draw. If you have a second draw greater than 150,000, you must submit loan forgiveness applications for the first draw PPP loan before or simultaneously with the loan forgiveness application for the second draw. And Rob is going to actually talk about this in length here shortly, but it depends on your specific situation. You may or may not want to wait to file. Here you also make no payments until or after you receive a forgiveness decision. So that's always good. You'll submit one of the 3 SBA forms listed here. It's possible though that your specific lender has their own form. And so you want to check with them before submitting or assuming that one of these 3 forms. You just want to check, be safe. And of course, you'll always be prepared to be including the different documentation that they're requesting. So as needed, you will add the supporting documents. So here, to bring it home, it's important to note that the timing and the process is important. You will send your forgiveness application to your lender or their designated service company, not the SBA. They have 60 days to review your application and request any additional information from you. They then will upload your application to the SBA portal. The SBA then takes 90 days to confirm or reject the lender's forgiveness recommendations and will convey this back to the lender, who then in turn is the middleman, right? And they will come back to you with the decision. The decision will fall basically into 3 categories: full forgiveness, partial forgiveness, and no forgiveness, as you see here. If you don't agree with the decision, it can be challenged under certain conditions. And if you are denied forgiveness entirely or have not applied within in that 10-month window, you will start to make payments on the loan at 1% interest for either a 2 or 5-year timeline. So remember that piece. This is the 10-step process. In a snapshot, really high level, Rob is going to come back to you and share with you what may not be forgiven, which is the next $1 million question. Rob, why would someone not be forgiven? Please tell us.
Well, thanks, Bianca, and good afternoon, everyone. So yeah, I'll talk about why our application for forgiveness might not be accepted at all, or why the forgiveness level might be reduced. And there are really 4 potential trouble spots that we need to make sure we get right, or we avoid the trouble spots to get the maximum forgiveness. And the first one is pretty basic, as we've already covered. The PPP was designed to keep people on the payroll and keep them employed. So a fundamental part of that is you spend at least 60% of your total loan amount on payroll. Now, if you don't hit this level, then you won't get full forgiveness. On the other side, spending 100% of the loan on payroll is absolutely fine too. We just need to make sure that we hit that 60% threshold on payroll. And as Bianca covered, it's not just wages here. Some of the other things that we can include to get to that number are healthcare contributions, paid sick leave, tips, bonuses. So we can include all those things to make sure we hit that 60%. The next trouble areas that we see are if we either reduced our headcount, reduced our staff, or reduced the pay or wages that we pay that staff during the time that we had the PPP loan. So those are two things that may cost us some forgiveness, and we'll get into how that might be the case or why it may not be. And the last area of concern really is unapproved uses of the money, or what's called double dipping. So if we use it for an unapproved expense, or we double dip with another program, and I'll explain that in a moment. So let's cover each in a little bit more detail. Next slide, please. Okay. So the first one was this reduction in headcount idea. And there's a couple of concepts that I wanted to make sure everyone was squared away with as we go through it. The first one is this concept of FTEs, or full-time equivalents. So simply put, if someone works for you at least 40 hours a week, that's a 1 FTE, okay? They count as 1 full-time employee or full-time equivalent. If someone works for you less than 40 hours a week, then they're a fractional FTE. So it could be 0.5, 0.25, however the numbers work out. There is actually a special simplification that the SBA is allowing, such that anyone who is less than 40 hours, so anyone who's part-time, can be considered a 0.5 FTE. And this will start to make more sense as we go through it, but just wanted to talk about the concept of full-time equivalents. The next term is covered period, and this just simply means the time over which you spent the PPP money. For most people, it's going to be 24 weeks. As Elisa told us, it went from 8 and then it was expanded up to 24. It ended up being anywhere in between 8 and 24. So any of those times are acceptable. So covered period is the amount of time, or the duration of time over which we spent the PPP funds. And the last term in regards to this is the reference period. And that's really the baseline that we're going to use to compare our employee levels, our headcount levels. And what we're really going to do is, as you can see on the slide here, we're going to compare the number of people that we had during our covered period, okay? And we'll call that A. So this is the average weekly headcount, average number of people per week on staff during the covered period. And then we're going to find the same number for the reference period. And the SBA allows us to use 3 different reference periods at our choice. So it can either be February 15th of 2019 through June 30th of 2019, or January 1st, 2020 through the end of February that year. Or if we happen to be a seasonal employer, and our headcount varies over time, we can actually choose any 12-week period that we want between February 15th, 2019 and February 15th, 2020. So it's completely up to us which reference period we're going to choose. And I would actually recommend that, you know, we'll talk about the math here, but we do this math, or you do this math for each reference period, just to see which works best. So again, we're going to figure out how many people we had on staff during the covered period, how many we had on staff during the baseline reference period. We're going to divide one by the other. So as you can see on the slide, A divided by B. If the answer is greater than 1, then we're in great shape. It means that we're eligible for full forgiveness. We had more people, or the same number of people, on staff during the covered period as we did in the reference period. If the answer is less than 1, then there may be some impact to our forgiveness level. And we worked a quick example here. You can see down at the bottom. So let's say the company had an average weekly staff of 10 full-time employees during the reference period, but because of reduced business levels, they dropped the number of people during the covered period to let's say 7 full-time person, and 1 quarter-time person, so 7.25 FTEs. So the math there is 7.25 divided by 10, and that tells us that we are eligible for 72.5% of our forgiveness for that element, okay? So our forgiveness may be reduced by that amount, and we'll see again why it might not be. So again, it's up to you which reference period you use. Try to use both and get the best result. The best result being ideally a number over 1, okay? Even if you did reduce headcount during the covered period, you could still be eligible for full forgiveness if one of the following exemptions applies to you and your loan. And the big one here is that if your loan was for less than $50,000, and the SBA tells us that about 85% of them were, then you can relax. You don't need to run that math. You are exempt from FTE provisions. Your forgiveness cannot be reduced simply because you reduced your head count, okay? So if your loan is for 50,000 or less, we're in good shape. For everyone else who has a loan more than that, there are still some exemptions that might come into play. One that we're seeing quite a lot here is if you've offered to rehire an employee under the same conditions, the same hours, the same pay rate, and they decline. And there's a lot of this happening at the moment with the higher unemployment benefits still out there. If it happened to you, that won't be held against you. That won't be counted as a headcount reduction. You just need to document the offer that you made to rehire and their refusal, okay? If your FTE numbers or your headcount is down because you had to fire an employee or one resigned, again, that won't be held against you. If an employee requests a schedule reduction, say from full-time down to 20 hours a week, same thing, it's not your fault, and that won't be held against you. So there are these exemptions out there that even if we did reduce headcount, may apply to us. And if your PPP loan amount is under 150,000, you can simply attest, if this is the case, that during the covered period, the PPP loan period, you weren't able to operate at the same business levels as you were pre-COVID. So obviously this may be true for a lot of retail, a lot of restaurants, just businesses in general. The business level hasn't returned yet. So you can simply attest to that fact, and you'll be waived any penalties for the FTE. So last but not least, if you did lower your headcount and none of the other exemptions that we talked about work for you, you can still get full forgiveness if you restore your headcount by the end of your covered period. Okay, so by the last day of the 24 weeks or the 8 weeks or 12, whatever you decide that is, provided you're back up to full headcount at that time, then again, no loss of forgiveness there. Next slide, please. Okay, so the other area was if we reduce wages for our staff. So this is a concern. You know, that we don't want to have taken a PPP loan based on paying people $10 an hour and then immediately start paying them $5 an hour. That could cost us forgiveness. So just like the headcount comparison we did on the last slide, here we're going to compare pay during the covered period against the quarter immediately before that covered period. Okay, and the PPP rules say that we need to continue to pay our employees at least 75% of what we were paying them in that reference period. We need to continue to pay them at least 75% of that. Or I guess said another way around, we can reduce wages by up to 25% before it starts to impact our forgiveness. And again, I've got another quick example here that hopefully would clarify. So we've had a borrower that took a 24-week covered period. He had a full-time employee's salary was reduced from $1,000 a week in the prior quarter, in that reference quarter, to $700 a week during the covered period. So in this case, again, we were allowed 25%. So the first $250, the first 25% of the 1,000 is exempt. Only the remaining $50 counts against us in terms of forgiveness. So our forgiveness, again, may be reduced by $1,200, which is the $50 per week times the 24-week period. Okay, so just something, and in the forms, as we'll get into the forms, you'll see that it guides you through this math if you do have these payroll and pay reductions. So next slide, please. Okay, so one thing I wanted to point out here, and it's a little bit of a detail, but I think it's important to cover, is that when you do calculate your payroll costs, and if you've reduced pay, don't calculate it as an overall number. In fact, the form will guide you employee by employee what their pay rate was if there was a reduction. Okay, so you'll have to fill out those boxes. And the reason we want to do it that way anyway is to avoid a double hit. So in other words, let's say we have 5 full-time employees that are each paid $10 an hour. And due to COVID, we have to cut 2 of them back to 10 hours a week. So if we just look the incorrect way of doing it, if we just looked at overall payroll, what we see is that overall payroll went down from $2,000 a week to $1,400 a week, which is more than the allowable 25%, and it would trigger a possible loss of forgiveness. So what we really need to think about here, and what it will force us to do on looking at it on an individual basis, is understand that the employee's actual pay rate here didn't change. What changed was their hours. So the correct way to record this on the form is as a schedule reduction, okay? From a 1 FTE to a 0.25 FTE. Okay, so again, look at each employee when you're building this overall payroll cost. Consider each employee separately to get the best result possible. Next slide, please. Okay, and just like headcount, there are a couple of exemptions that we can take advantage of. Again, if the loan was for $50,000 or less, we're exempt from reductions in pay. Or if we are able to restore the pay rates back to their original levels prior to the end of the covered period, again, that won't count against us. So if we did have to reduce pay, hopefully we can take advantage of one of these exemptions and preserve the forgiveness. Next slide, please. Okay, so the last reason that we may get less than full forgiveness is if the money was used in an unapproved way. And I've listed some of the main examples of this here that could cost us some forgiveness. And the first one really is prepayments. So as Bianca mentioned, you can use your PPP funds to pay bills that are either incurred or paid within that covered period. Okay, so under the normal routine billing cycle. So you may, if your covered period starts in June, it's acceptable to pay May's electric bill because that bill comes to you, let's say on June 15th. That's perfectly acceptable because it was paid within that covered period. So anything like that, payroll, utilities, rent, supplies, everything you show on your application must be related, either incurred or paid, to that covered period. What you can't get forgiveness for, though, is if you prepaid your electric bill through the end of the year, or if you regularly pay holiday bonuses to your employees, let's say at the end of the year. Even though that might be your regular routine business practice, it's just not an obligation that comes due, that's incurred within that covered period that runs maybe from June to August. So that would be an unacceptable use or a prepayment. The next area that we see a lot that causes problems is including non-W-2 employees in your payroll costs. So payroll should only include your W-2s, not independent contractors. They had the opportunity to apply for PPP themselves, and many of them did. So potentially what you're setting up is, if they're included in your forgiveness claim, there's that sort of double dipping that we were talking about, where you know, they've got their own PPP loan, you're paying them off of yours as well and getting that forgiven. So make sure that you've only got your own W-2 people on there. Now, if you got your PPP loan based on you as the owner of the business, that's different. That's obviously, you know, you'll substantiate that with your tax returns when it comes to submitting your forgiveness claim. That's a little bit different, but the main takeaway is just include W-2 employees here on this, okay? The third reason that we see, or third unapproved use, is this is really double dipping. And as you know, there are a number of COVID relief programs out there in addition to PPP. So this is what we want to do, is avoid any appearance that we're applying the same expense to two programs. And I'll give you an example here. The FFCRA, the Family First Coronavirus Response Act, required employers to provide paid sick leave to their employees for any COVID-related issue, okay? And it actually reimbursed them the cost of that sick leave. What you can't do is get paid under FFCRA and include that paid sick leave as a payroll expense for PPP forgiveness, okay? So that would be an example of double dipping. So make sure that your cost is perfectly fine to take advantage of both programs. You just need to make sure that the costs of each are separated. Another example would be, maybe you didn't use any of these other programs, but you had two PPP draws. Well, there you're going to want to make sure that your covered periods for each one don't overlap, okay? That they're paying distinct and separate periods of time. So no overlap there. The other thing that we see, especially true for home-based businesses, is that a lot of home-based businesses actually get a benefit, could take a deduction for using part of their home on their taxes. Well, PPP can be used to pay the interest portion of your mortgage on the portion of the house that's used as a home business, provided that's your regular business practice and that you can demonstrate that you did that, say, in 2019 or 2020, if you filed your taxes for 2020. So provided you've done it in the past, it's a reasonable and approved use here. If you didn't do it in the past, unfortunately, you can't start doing it now. So make sure that is not one of the things that that you claim as an approved expense. So it can get pretty complex if you're not sure about whether or not an expense is covered. As Elisa said, we've got SBTDC counselors around the state. We can all help. Our services are completely free and confidential. So that's really a coverage of the problem areas and how we can possibly avoid them. Now let's talk about the actual forms that we might use to submit for forgiveness. And I guess the first piece of advice here is that before you do anything, check with your lender on what they would recommend. The SBA has generated 3 forgiveness forms, but some banks are using their own and they require that you use theirs. So save yourself a lot of potentially wasted effort and make that call first. Generally speaking, if your loan was less than $150,000, you can use form 3508S. All these forms are available online. Some banks are sending them out to borrowers as well, but they are all available to you. The 3508S is the simplest of all the forms. It's literally 1 page, and there's no requirement for you to submit any supporting documentation with this. You're simply attesting that essentially you followed the rules of the program and that the information you're providing on the form is truthful. Now, having said that you don't need to send supporting documentation, it's an incredibly good idea to just gather that information. There's an audit process. A certain percentage of loans are selected for audit. If, for example, you don't like the bank's answer about how much forgiveness you're going to get and you want to challenge that, you're going to need this documentation to be able to challenge it. So make sure that you can substantiate your forgiveness claim, even though you're not actually required in most cases to submit that documentation. So now, if your loan was for over $150,000, you could use the form 3508EZ, still a very, very simple form. I think it's 2 pages. And that's very straightforward as well. You will be required to support that with some documentation. If your loan is over the 150,000 and you did have headcount reductions or wage reductions, like we talked about earlier, and you can't take advantage of any of the exemptions that we talked about, then you will have to use form 3508. And unfortunately, this is the most difficult one. It's the most involved. Having said that, they're all relatively straightforward, but your order of preference really should be from the top of this slide down. So 3508S first. If not that, then the EZ. Only if you absolutely have to use the 3508. So really, again, check with your lender. If your lender immediately tells you that you need to submit a 3508, then you should ask why. What is it about your specific case that makes that necessary? Because it is a significant amount of more work there. So next slide, please. Okay. And as I said earlier, the vast majority of borrowers should be able to submit the form only with no supporting documentation. Very, very important that you do keep it ready, though, in the event of an audit or in the event of you don't like the lender's initial offer. Documents that would help substantiate our claim are pretty much straightforward. They're documents that you should have easily on hand. On the payroll side, it's things like payroll provider reports if you use a third-party provider, bank account statements, canceled paychecks, Form 941s, which is the quarterly tax returns. So they are very generic documentation requirements, nothing too exotic, nothing that you shouldn't be able to come up with fairly regularly. Again, if the PPP was for you as the owner, and it's owner's compensation replacement, then you'll need to submit your 2019 or 2020 tax forms that you filed. And depending on your organization type, that could be a 1040 Schedule C or a 1065 K1. So again, something that you should have and be regularly using anyway. On the non-payroll side, obviously the documentation will depend a little bit on what we use that money for. But it could be receipts from our lender, from our mortgage holder, lease agreements, canceled rent checks, utility statements or bills, invoices from contractors or suppliers. So again, fairly easily attained documents. One final note on this: if you are required to submit documentation, you don't need notarized originals or anything like that. Scanned copies, as far as we can see, it has been fine for every bank so far. So the bottom line is, I think with a little planning and preparation, the vast majority of borrowers should be able to avoid these trouble spots, should be able to get full forgiveness. The key, though, is communicate early and often with your SBTDC counselor, with your lender, to make sure that as you work through the process, that you get all your questions answered. So with that, good luck, everyone, and I'll turn it back over to Elisa for some Q&A. Elisa?
Excellent. Thank you so much, team. What a great job in delivering a lot of information. It's quite a bit. And I want to make 2 points that are important. First being, there are counselors, as I've mentioned earlier, around the state that are ready and prepared and willing to assist you with your questions, and not only with the questions related to these loan assistance programs, but also to help you build and make your business stronger. So that's the first very important takeaway. You may request that counseling through the website. It's something that is very, very readily available and easy to fill out. It's called an ERFC, electronic request for counseling. When you do that, you just indicate the region where you're located, and then that will go into the queue for a very knowledgeable counselor to help you. The second thing I want to reiterate and make certain, because this is a lot of information, this is going to be recorded, is being recorded, and will be available for reference by tomorrow, Friday. And that will also be on our website, sbtdc.org/coronavirus/webinars, basically up under the webinars tab. Okay. Now, want to definitely acknowledge and thank all of our great partners. We have, these are just a few, we have a lot of great resource partners across the state that we work with and that work with you guys in providing assistance. And so we want to thank them for their support. And we're grateful for you being here, spending this time with us today and becoming informed and being able to help you and your business. So we do have a few questions that we want to go ahead and cover that we are receiving quite frequently, and thought that maybe this might be a good way to cover that with you. And then we have a couple in the actual Q&A that we will cover after that. So the first question that we hear quite a bit is, what if the bank says my loan is not forgivable? Rob, will you take that one?
Yeah, absolutely. So there is a process for appeal. What will happen is the bank will send you an official notice that your claim for forgiveness was denied, or notifying you and basically notifying you of this opportunity to appeal. You do not, again, go through the SBA. You go back through your lender and you tell them that you would like the SBA to review your file. From that point, the SBA has set up an Office of Hearings and Appeals to review these cases. Now, I would say that what they're saying at the moment is that initially your bank has 60 days to review your initial application, and then passes it on to the SBA for their blessing, so to speak. And the SBA has 90 days with it. So, but what we're seeing is those times are going out a little bit. And the same is true for appeals. You have to submit a request for an appeal within the 30 days of getting the decision. They say that they'll respond within 45 days, but again, I would anticipate that that's probably going to go out a little bit longer than that. One key thing here that I wanted to point out also, as Bianca mentioned earlier, you have a 10-month window in which to apply. Once you have applied, essentially that clock stops, and you won't be making any payments, you won't get any bills while it's in review. Okay, so don't worry that the SBA is taking longer than advertised in reviewing your file. Once you've got that application in there, it's essentially it's in place. So, and the other thing on the appeal, again, is just make sure that you have good documentation to be able to support your claim. So
cool. All right, thank you, Rob.
Sure.
All right, another question that we have heard quite often is, can I still qualify for full forgiveness if my use of funds is different from my original PPP application? So Bianca, I'm gonna toss that one to you.
Thanks, Elisa. The answer to that is yes, so long as you still meet the basic criteria of using at least 60% of the funds requested for eligible payroll cost, and no more than the 40% of funds requested for eligible non-payroll. So yeah, so good news.
Yes, good news indeed. All right, you're on a roll. This next one's for you, girl. I took out a PPP loan. but have permanently closed my business just recently. Can I still apply for forgiveness, Bianca?
I am the yes girl, yes. But the amount of forgiveness that you will get depends on the FTE reductions and wage reductions that we talked about earlier. Rob was very detailed in that section. And if these happen within the covered period, then there may be some reductions in the amount of forgiveness as well. So.
Cool. All right. Thank you. And then when will my PPP loans start to accrue interest? So I'll take that one, I guess. The interest began to accrue the day you received your funds. And if your bank forgives any part of your loan, it will forgive the associated accrued interest. Okay. If you don't file a request for forgiveness, or you get fully or partially denied that forgiveness, you still will start making payments 10 months after the end of your covered period. And of course, the accrued interest will be factored in. So that's pretty straightforward, pretty simple. I have one more question that we received quite a bit that we'll cover, and then we'll go into the Q&A from the webinar attendees. So Rob, I'm gonna give this one to you, sharing the wealth here. How does a forgiven PPP loan impact my taxes?
Okay. So one of the changes that was made along the way, we covered the revisions to PPP, was that it is no longer considered part of your federal or state taxable income. So that's true regardless of when you got the loan. That change happened midway, but it was retroactive for all loans. So it's not taxable income. So in addition, in 48 out of 50 states, the expenses that you used for PPP can actually be deducted from your state taxes. Unfortunately, North Carolina is one of the two holdouts at the moment. So it doesn't count as a deduction. There is a bill in the Senate that hopefully will allow that. But yeah, not taxable income, federal or state, but unfortunately not deductible currently in North Carolina.
All right. Thank you so much, Rob.
Sure.
So within the Q&A on the webinar tab, I see there are two questions that are fairly related. Rob, I'm gonna toss it back to you on those two. Basically, let's see, Mitzi's asking about the EIDL loan conflict. And then Jerry is asking, is there any forgiveness for the EIDL? Okay,
I'll take Jerry's first. Unfortunately, there's no forgiveness for EIDL. It's just a low interest, long-term emergency loan kind of thing. So that's more of a typical loan situation. The conflict with EIDL, yeah, that's a difficult one because most people assume because it's a loan that they can spend the money however they want. In the paperwork that you got with the EIDL loan, it gives the SBA the right to come in and look at your uses of those funds. So again, what we want to do here is just keep the uses completely separate. What we're using the EIDL loan funds for and what we're using PPP for. Realistically, will they see that overlap? It's just there's a lot of applications they're processing, but it's a risk that I don't think you should take. Just avoid the overlap.
Yeah, I agree. Excellent. All right, our last question in the Q&A is related to the FTE rule, the exemption to the FTE rule. Okay, and the question or the situation is that this particular business shortened their workday to start a day later because most employees had children and they're not going to school, and the daycare situation was very difficult, of course, during that time, still is, quite frankly. So that needed to be taken, into consideration or elsewhere. So is that a permissible exemption? Rob, I think you talked about the exemptions. Can you help us out with that one?
Yeah, so if I understand, it was the work day that was reduced in time?
That's what is indicated here. Joy asked the question, they shortened the workday to start each day later.
Okay, okay.
Mhm.
That would count if it took the people again below 40 hours in a week. It would take them into the realm of being fractional FTEs versus the one FTE. So theoretically, yes, that would be a schedule reduction that was non-voluntary on the part of the employees. So it has the potential to impact that. Again, if the loan was for less than 50,000, it's not an issue. If it was for more than that, then again, hopefully one of the exemptions can kick in and protect that. But
Yeah,
technically, no, that is a schedule reduction. Yeah.
yeah. All right, so we're getting close to the top of the hour, but I'm gonna take one more question that just popped up in the Q&A, and let's see if we can decipher what the right answer is to this. This is from Johnsy McSwain. The bank my loan went through was not my own bank. Will I be able to find the correct info on their website to find out specifics about their forgiveness app and how to submit it?
Yeah, I think anyone that was approved to write the PPP loans has certain requirements on them that they're accessible. So you should be able to reach back out to them and get whatever their specific policies and procedures are. I would say for anyone that has a cabbage loan, or that's being serviced by a company called K Servicing. And there have been some reported issues in the press with, some delays there and some potential issues. So if it's that, we might have to have a longer conversation about what to do. But generally speaking, no, any lender or servicing company should actually be reaching out to you as you get to the end of your covered period to advise you of what your options are for forgiveness. So it should be doable.
All right, thank you again. Thank you, team. Excellent, excellent, delivery of information. As I mentioned earlier, the recording and the slides will be available for your reference online, within 24 hours. Also, you may receive a survey, and if you do, take time to complete that so we can continue to offer clear and concise and helpful information in the future. And then last but not least, definitely request a virtual appointment with an SBTDC Business Resiliency Counselor. You will not be disappointed. We actually, run the gamut in terms of our backgrounds and skill sets, and we are all about making your business better. So with that, we are right at the top of the hour. I love it, at 3 p.m. Thank you for spending the hour with us, and we wish you the best.